201 or 240. So with this example, it's easier to understand why buying at 60 or 65, wherever, is way better risk reward than waiting for 50, 53 or 50 to get hit. I remember so many guys calling for 50K when Bitcoin was at 60. And I'm not against Bitcoin going lower. It's possible for sure. Ranges can get broken. But yeah, as long as it's not broken, you shouldn't bet on downside. As it's against the odds. Like I can like this. These are the odds, roughly the odds of a range holding or breaking. Because mostly it taps the support levels and the resistance levels a couple of times, and then it breaks to one of the sides. So when you're at a range high or range low, the highest probability outcome is it going back to the other low or to the midpoint. So in this case, when Bitcoin goes to 60K, where it was, it's most likely to go to 75, 73, 74, whatever, to the midpoint. So yeah, that's just statistical analysis. And dollar cost averaging solves all this. If Bitcoin decides to go more choppy, more sideways, like this, and then here, your average entry if you're dollar cost averaging right now would be around 69, which would only be 160. So you miss out on some percentages, but you put in zero effort with predicting the markets. Maybe you dollar cost average more aggressively at lower prices, also possible. But you will get a nice overall entry if you dollar cost average until October 6th. So that's still what I'm recommending for if anyone is looking to enter the market. But that's what I'm watching. Boring chart, like it's just going sideways. Going to be setting up a range here most likely, and I'm still dollar cost averaging every Thursday into Aura, expanding my size, and we'll keep doing so until October as well. Maybe a little bit later, depending on the airdrop dates. But that's for Aura. It's just I'm certain it's gonna be the next $1 billion runner, but it's just gonna take time. As long as memes don't run, don't expect your favorite meme coin to run. That's how the game is. If no one is looking at meme coins, yours won't run either, even if it's going to be the best meme coin in the next cycle, or if it's going to go to $10 billion market cap. Every meme is just showing the same price action here. Maybe even worse than, well, okay, this troll, it's looking a little bit stronger than Aura. You have Giga. It's doing the same. It went up a bit and now it's rejecting from there again. Asteroid tanking as well, but yeah. So every meme is showing the same price action here. It's just healthy. If you're quite heavy in memes, don't be too shocked to see memes bleeding down a bit more for the next coming weeks or months. You expect memes to run mid-cycle, roughly. You tend to see more useful coins run early cycle because that's where most smart money is. At 15K Bitcoin price, or let's say at 25K, there was like no retail in Bitcoin. It was just people who were still holding Bitcoin, who were buying more, or people who are already in crypto, just trading slash accumulating crypto. And then since 60K, it was retail again. Although we never had retail influx like we had in the previous bull market. But this is where meme coins started doing best. Mostly here. So early cycle, you don't expect memes to run as well as later in the cycle. So when October 6th, the October low is set, don't bet on memes doing extremely well in the next month. It might take some time. So keep that in mind. And yeah, until then, just keep dollar cost averaging into your memes. And I think it's going to be a great bet for outperformers, as every cycle memes have done the best. And also AI is also very interesting currently. It's it's the still the hot item right now. And virtual is my bet for AI because it's just it has kept building in the bear market. The chart has been consolidating for ages. Like all this is just a compression. Well, let me put it like this. So virtual setting up for a great run. The reason is for a great run, just chart wise, charts tend to move like this. Long consolidation equals big rally. And so like this. And short consolidation tends to equal smaller rally. So if a coin has been consolidating for a long time, it has way more energy to go way higher. It's the same as you as when you pull a string, pull a spring. You stretch a string very far, a spring, and then you unleash it, and then it has way more energy than when you just pull it a little bit. So yeah, I don't know if that makes sense, but a large consolidation is a good thing to see, especially when it doesn't go down a lot in the bear market, because the it's at these levels, which is I can maybe duplicate this. Oh, I haven't paid for TradingView in a while. Let's do it like this. Okay, so December 2025, Bitcoin was at 90K. Virtual was at the same price as it is here. And October 2025, which was the great liquidation event, that was here. Bitcoin was at 110 and virtual was at the same price it is as Bitcoin was then. But yeah, the thing was that alts were really beaten down at this time. So it's not really representative as much, but chart is setting up well. Great narratives developing with virtual. They're building great stuff, so I'm happy to hold this. What do you mean with breaking 60K? Is it like sweeping below, or is it just fully breaking and trending down lower? Because I don't count this as breaking 60K. This is just a fake out slash liquidation event. Yes, but the lower you go, the higher probability, the lower you expect price to go, the lower the probability that you're actually gonna enter at the lowest price of the bear market. 50-55 is a reasonable Q4 range, by the way. I'm totally not opposed to that happening. In a bear case, it can even go lower. You saw the same thing happening last cycle. This was around the time where we are in, probably like here. And then it went sideways, broke down once more in Q4, and then that was the bottom. So maybe it stays at these lows this cycle. Maybe it goes lower for one leg lower, and then that's going to be the bottom.